excited to be back with you once again, and this time you're stuck with me on the stage for a bit longer. I had the opportunity to meet Mark Gould, who's the chief payments executive at the Fed a while ago, and when he agreed to do today's Fireside chat, I said there's no one else who's going to do it other than me, because him and I kind of really hit it off. And so with that, I'd love to bring up Mark. We're going to get into this. We're going to talk all things payments, all things FedNow, and all things the future of finance. So thank you very much, Mark, for being here. Round of applause for Mark.
Great. Thanks, Phil. Thanks for the invitation. It's great to be here.
I'm legitimately, it's funny because I do this all the time. I'm legitimately excited, and I want to thank you. And I to what I just said, we hit it off mostly because you were probably one of the most honest and genuine folks you tend to meet in government. Now, that does not say anything about the next two panels that are coming up and or our closing commentator. But I will say that sort of understanding kind of where you've come from, where you are, what you've accomplished, not just in the last couple of months or the last couple of years, but how you got to this point, I think it'd be important for everybody to sort of understand that. And so how long have you been there, or how long have you been at the Fed, sort of where you come from, and sort of how have you got to this point?
Yeah, okay, well, great. So again, thanks for the opportunity. It's great to be here. So I've been at the Fed for about 32 years, which is about a third of its existence, which is kind of scary. But in that time, I started basically 2 days after I graduated from college back in 1991, and as an entry-level analyst supporting the people that were running our payment operations back then. And once you've been exposed to payments, I really don't think you ever go back. I mean, you get bitten with the bug of money moving and how it all works. And so I supported the folks running our cash operation and our retail payments operation. And that led over many successive years to running groups and functions, both in our district, which is the 12th district. I'm based in San Francisco. Eventually to running our national cash business, being COO of the bank in San Francisco, a little stint as interim president and CEO of the bank in San Francisco, which allowed me to represent our bank at the FOMC for a couple of cycles. And you know, when you've graduated with a degree in economics and you learn about the Fed, the prospect of eventually being at the table at the FOMC and participating in the meeting is pretty cool. So I did that for a little bit, and then a couple of years ago, we reorganized our payment services in the Fed to be much more integrated at an enterprise level, and I can talk about that more. But I was selected as the first Chief Payments Executive for the Federal Reserve System. It's not a role that ever existed before because we had never run all of our services together in an integrated manner across the 12 banks. I've actually joked with folks that you know, the Fed being created with 12 independent banks and an oversight body in Washington, D.C., it's almost like a DeFi equivalent of central banking, but you know, we're working to knit all of that together to present a unified face to our customers.
So, I mean, God bless, 32 years, and you're still as optimistic as the day you started and enthusiastic as the day you started.
Started when I was 10. Did I mention that?
That all being said, most people don't think of the Fed and think instantly payments, right? I think obviously that's evolved more in the public eye, but there's obviously the payment system is a third rail of the Fed. I mean, talk about that, because most people think about the Fed, especially in rising interest rates, gets all the attention. Tell me how you fit in.
Well, I'm a little sensitive to being the third rail, because that's you know, it's not necessarily a good thing, but yeah, you know, when people think about the Fed, if we were just to walk outside the building today and do word association with 10 or 100 people walking down the street, and you ask them to think about, okay, what is the Fed? You know, most people, they might come up with, you know, the economy, they might come up with inflation. Some might know the chairman, Jay Powell. They might know something about safety and soundness. They might know something about a lot of those things, but I'm guessing almost nobody would talk about payments. And that's really the third leg of the stool of central banking. So the Fed does monetary policy. It's the thing we talk about and we read about in the paper the most. The Fed does supervision and regulation, trying to make certain that the financial system is safe and sound and that people's money is safe. The third thing that the Fed system does is financial services, and that's my group. And essentially what that is, it's about 2,000 people across the country in all 12 of the banks. And we offer a suite of financial services ranging from currency and coin to check clearing, ACH, wire transfer, FedWire securities, and we've just introduced a new instant payment platform called FedNow. So we cover the entire spectrum from cash, which I think of as the original instant payment, to FedNow, which is our latest innovation of enabling real-time money movement across the country.
The perfect intro, right? And so I'm going to keep this as broad as possible. So how's it going, right? I think FedNow was, when it hit, it was arguably the biggest news, and it lasted for quite a while. I think, in terms of the sort of the public awareness, it's kind of like things have slowed just in terms, but to me, sometimes that's a good thing, right? Is it working? How's it going?
So it's going well. Let me go back to the launch. So when we first announced our intent to get into this business, we said that we'd give the industry an update on our plans for the launch, and we said, it's going to be in the neighborhood of 2023 to 2024. So we gave basically, because we're good central bankers, we're very risk averse, we gave a 24-month target implementation window. And when we met this summer, I said, what was your assumption? In a 2-year window, what was your assumption about what the launch date was going to be? Do you remember what you said?
I forget what I said, but I knew it was I thought far out.
I think you said 2027 or something like that. It was well outside the 2-year launch window.
I'm now going to interrupt you because I went farther than that. I actually showed him an op-ed I wrote in 2019 that
I didn't
said,
really want to bring up the op-ed.
Yeah, I wrote an op-ed in American Banker in 2019, said how it's going to be a colossal failure and we should not put any of our chips in that basket. And I, again, in sort of full disclosure, said I didn't believe you can get it done, but that's kind of why, it's kind of why I appreciate you where you are, right? Because you're able to get it done on time, early, and we're seeing success.
Well, so we clarified the launch window. We said it was going to be mid-23, and that's when it was. And so we launched in July of this year. We started with about 30 customers on the platform at that point in time, and today, the most recent number I have, it's from last week, we have 200 on the platform today. So we've gone from 30 to 200 in about 4 months. So we intend to scale very rapidly, and it's one of the reasons that I'm here and spend time talking with Phil and a number of you in the room, because in order to scale rapidly, we need to enable the industry to take advantage of instant payments. That means, first of all, we need to connect the vast and diverse array of financial institutions that we have in this country, and it's been brought up by several speakers already today, how diverse that group of financial institutions is, from extraordinarily small. There's a credit union associated with a church in Texas. It's open twice a week after Mass. And we're going from that to the very, very largest financial institutions in the world. And so getting everybody connected is one thing. Then getting people to use it and to fully explore the full range of use cases. I think there's a role for everybody in this room and a lot of people outside this room also. Because one thing that's dawned on us, even as our adoption is growing and people are very excited about it, is the market for instant payments in the US is very nascent. Instant payments are still a new thing that the industry and businesses, consumers all are going to need a fair amount of education about. And so that falls certainly to us, but honestly to everybody in this room. And I see fintechs as a huge potential enabler of this business.
And so you prove me wrong and you continue to see success, and obviously your growth is proving that it's working. Let's talk about the elephant in the room. Talk about the competition, right? The clearinghouse and sort of what they've done and what they've been able to build over the years. How does this play into it? How is it working together? How are you finding the reception has been?
Yeah, so I spend a lot of time talking to my counterpart at the clearinghouse, and we have a great professional business relationship. And what we agree on is for instant payments to be successful, we kind of both need to be successful. If you look at all of our other payment rails that the Fed offers, we compete with the clearinghouse on every single one of them. And we divide the market, roughly, 50-50 or 60-40, depending on the platform. So I think, what the Fed's role historically has been is to provide connectivity to the vast majority of small and medium-sized regional banks in the country. The clearinghouse has tended to focus on the largest banks in the country, and I think that's likely to play out a bit here as well.
So I often have the opportunity to go to universities to talk to classes and fintech and some of these topics. Oftentimes, I generally start the conversation by asking everybody to sort of how many of you have a $20 bill in your pocket? Talk to me about the idea of sort of erasing kind of currency from financial services, meaning Is it happening? And how do you feel about even some of the cities who are now requiring that people still, take cash as a form of payment?
Yeah, well, so this is, when we start talking about prognostication, I probably should say, these are all Mark's views, so everything that I
too
say
late.
today
It's too late.
yeah, no, especially forecasts. These are all my own personal views. So two things. One is, living in San Francisco, I spent a lot of time talking to people in Silicon Valley. In fact, the first question I asked Phil when he invited me to this was, can I wear my fleece vest or do I need to wear a tie? And he said, you need to wear a tie. So this is for you.
I don't know if that's what I said.
There's a couple of fleece vests out here, though, so I'm not sure. But when I meet with people, especially in the West Coast, and I talk about cash, they say, well, why do you spend any time worrying about cash? People stopped using cash 20 years ago. And I said, well, actually, they didn't. And then I give them a quiz about how much U.S. currency is in circulation. And the answer is today, it's roughly double the amount it was 10 years ago. So currency in circulation continues to rise at a relatively decent rate. And it rises especially during crises. So when you see a natural disaster, a geopolitical situation, a global pandemic, classic case, Y2K, 9/11, you name it, or even things like the Super Bowl or things like that, we see spikes in demand for currency, and that still persists even as other electronic means of payments have taken root. The way that I think about this is cash. Check, ACH, FedWire, and FedNow, they each play a role. And the way that I try to explain this to my friends who are outside the payments business is, when planes came out, they didn't make cars obsolete. And I still walk to my next door neighbor. I don't drive, even though I live in California. I don't drive to my next door neighbor. I wouldn't fly to the grocery store, and I didn't drive across the country. Each of these means of transportation has a specific purpose, a specific optimal use case. Payments are very much the same way in my view. So I personally don't see cash going away, because I think it's important that we offer a range of choice in our payment services, because, again, this is a super big and diverse and very complicated country.
We love to hear that. I mean, we talk about fintech all the time. We never say one product is better than another product. We say that we want to create optionality for consumers so they can make the best determination how they move forward. So you're growing. It's working. You went from 30 to 200. I expect your plans are to grow quick and fast. How does the structure of your office? How do you keep up with that? How do you manage that? Do you have the resources you need to do it, and how are things going to continue to move forward?
Yeah, great question. So the way that we've handled this so far is we really tried to segregate the team working on FedNow to be kind of a startup, if you will, within a 100-plus-year-old central bank, and that's worked pretty well for us. And that is continuing to be our approach. We really have a team really, truly focused on FedNow and nothing else. That includes customer adoption. It includes new features and functionality. So yeah, we have a very aggressive plan to scale, because running a payments business, if you don't have scale, you really don't have a business. I mean, it's a little bit like running a shipping company. You walk into UPS or FedEx, you want to send a package across the country. If I go into the office in San Francisco and say I want to mail my friend Phil in DC a package, if they say, well, we can get as far as North Dakota, that's not going to work. You need network effects. And so ultimately what we really need, as quickly as we can, to get every financial institution connected in the country. And then we also have a pretty rich roadmap of features and functionality that we're planning to introduce over time, because we didn't wait to have everything that we might ever want on the platform done before getting it into the market, because we wanted the opportunity to respond and to react to what we're hearing from customers, how our customers are using this. And this is one of my favorite things to do. If I'm having a bad day in the office, I'll go visit a customer or get somebody on the phone to just talk to them about how they're using this. And what benefits consumers and businesses are seeing, even at our, what I would say is our small but growing scale of customers.
Let me ask you this. Do you consider yourself, and I guess we probably should have started with this, but I think it's an important question for context. Do you consider yourself a government agency? Like, you guys are kind of a quasi-government, sort of public-private entity of sorts. How does that impact you in terms of how it relates to sort of the other functions of government?
Yeah, so the Fed is really not a well understood organization around the country, probably more so here in Washington than anywhere else. But you hit it on the head. We are a quasi-governmental organization. We have the 12 Federal Reserve banks, which are private entities, and the Federal Reserve Board here in Washington, which is a government agency. And so we have the kind of a public-private element to our structure. How that helps us, in my view, in financial services is I'm in charge of running the one business that the Federal Reserve system has, where we have costs and we have revenues, and we need to essentially make a profit every year by fully recovering our costs plus a little. Trying to run a business, it's a little bit easier being quasi-governmental than being a government agency.
So the theme has come up a number of times throughout the day, and as a matter of fact, our next panel, right, talking about novel activities and how governments are looking at fintechs and banks. How do you see the responsibility, banks, fintech companies, particularly as we hear about, every time there's a new invention, you find fraudsters or, folks who are looking to break the system or scam the system, find a way through. How has that permeated in the beginning, and how do you see that continuing as you move forward?
Yeah, fraud is a concern, I think, across every payment rail. I mean, as we talk about fraud on the instant payments rail, there's a spike in check fraud happening in the country right now. So, fraudsters tend to be pretty creative. How we're trying to respond to that is we've introduced a set of fraud mitigation tools that are on the platform today. We plan to evolve that, of course, over time and to expand that capability. And I'm pretty optimistic about our fraud capabilities on that platform, and also potentially informing our capabilities on other rails as well.
And you can, again, I'm sure we're going to cover this. I mean, so where's the responsibility lie, right? And so who picks up the responsibility? I know that when I send, money via Zelle, right, there's now a checkbox. Are you sure you know who it's going to? Because once it's out, it's out. Where does that responsibility lie? Does it lie with my bank? Does it lie with the fintech company? Does, who is holding the bag at the end of the day?
Well, there are enough lawyers in this room that I'm not going to answer that question definitively, because it probably depends an awful lot on the structure of your agreements. But, ultimately we're pretty clear in our operating agreements that it's the sending and the receiving banks that really need to know their customers and take responsibility.
And so I guess, I'll throw you, obviously we spend a lot of time with fintech companies. We now have more than 20 banks as members of the American Fintech Council. Your willingness, your wife's willingness to allow you to travel more, to sort of have some of these conversations, obviously whether it's with banking associations, fintech associations, have you found yourself now spending a lot more time trying to explain the system, how it's working, to try and get people bought in, or are you working another way to get people to adopt the system?
What I really sense is a lot of excitement in the fintech community to potentially partner with banks, because somebody up earlier said it really, really nicely, that banks are really good at a certain set of activities, and fintech firms are really, really good at innovation. And having the ability to take that innovation to scale, where scale already exists by partnering with a bank, I think that's a great model. I sense and hear directly a lot of excitement from fintech communities about the potential of instant payments and making instant payments ubiquitously available and broadly used in the United States is our goal, and we will only get there together by all of the banks in this country and the fintech community really working together to make that happen.
Have you found some of the pain points to be generally the same across bank size, fintechs, and so on, or have you found there's sort of nuanced, as you're learning more and more about the system, you found nuanced challenges for adoption?
I think they fall into a few categories. Most of the roadblocks or issues that we hear. One is just the relative capability of each of the core providers. I think most people in this audience probably know there are a few very large core providers to the vast majority of relatively small, medium-sized banks in the country, and they're all at a different level of readiness for instant payments, but are all making huge strides and are really focused on this. So they've been just really terrific partners. Another thing that we commonly hear is my customers aren't asking for it yet. My message is, well, when the bank across the street is offering customers access to their funds immediately, you may hear that from your customers. But there is demand out there for money to move more quickly, and we've heard several examples of that today. And then I think probably the thing that affects every business, even including mine and probably yours, is just priorities. How do you fit? There's always more to do than there is available time, resources, and money. And I think that's true in almost every business. And it's certainly true, among our customer base as well. So many people, in fact, I haven't ever heard a bank say, I'm not interested at all. It's just a matter of, yeah, we're interested, but, gosh, we're in the middle of a big project, or we're in the middle of a merger, or we're in the middle of something else, and we need to take a little time to get there.
I hear that too when I inquire about membership. There's always something else going on. And so I guess that you talked about, and we'll end, we have another minute or two, you talked about you rolled it out a little slower, right? The idea of we don't want to push everything out is what can we expect next, right? What's the big announcement coming out of either FedNow or your office in terms of the next innovation or the next iteration?
Yeah, so what we're really focused on, as I said, is building the scale. And so what you should expect from us, hopefully, knock on wood, is for us to continue announcing new milestones of customer adoption. That's something, again, that we're quite focused on. And then, over the next year to 2 years, I expect a regular cadence of new features and functionality, and we'll be public about that as well. But when I met with somebody last week, and they said, well, you only have 50 customers. And I said, no, we have 200 customers. And they were really surprised. My goal, I hope that we're able to accomplish this. I hope that we're able to surprise the industry with how quickly we grow the network, because ultimately that'll drive our collective success.
From this skeptic to I'm sure many others, you've proved us wrong once before. I have no doubt you're going to prove us wrong again. I mean, the only question for us is that we hope that you'll stick around for maybe another 32 years so we can continue to see those innovations. But I just, on behalf of the entire fintech community, on behalf of the bank community who recognize the need for innovation, you have been a game changer in terms of offering optionality for people to choose from. And so I want to thank you for your engagement. I want to thank you for your willingness to continue the dialogue, and more importantly, willingness to build within, within government, in that quasi position you find, to be as enthusiastic for actually getting things done and moving the ball forward. So thank you very, very much.
Yep, thanks, Phil.
Thank you.